Is the AI bubble bursting or recession warning?
Yesterday, global markets sounded a massive alarm for the bulls. This doesn't look like a typical correction, but instead feels like the start of global risk-off liquidation. From the AI craze turning into a cash burn panic and to growing fears of an economic slowdown, the market sentiment has completely shifted. So where do the Nasdaq and gold go from here? Let DBG Markets give you the full outlook in just 2 minutes. First, what's actually happening with tech? Simply put, CAPEX is terrifying investors. Yesterday, Amazon dropped a bombshell, announcing an estimated $200 billion spent on AI infrastructure for 2026. That's a massive 50% jump from last year. Their stock immediately plunged 11%. It seems investors have finally woken up. They're tired of the AI dreams and are starting to ask the hard question, where is the return? When tech giants like Microsoft, Google, and Meta are all burning cash at this scale, the market stops worrying about growth potential and starts worrying about squeezed profit margins. To make matters worse, the resilient labor market narrative is falling apart. After a weak ADP report, yesterday's jobless claims jumped to 231,000, alongside the worst job opening data we've seen since 2020. All signs suggest the labor market is losing steam, and that soft landing everyone was hoping for, it's looking very shaky right now. That's why we saw a near total sell-off in global equities yesterday. So, what does next week look like for tech? Under the dual pressure of spending panic and economic cracks, the buy-the-dip mentality is facing its toughest test in months. Failing to sustain its recent peak, the Nasdaq 100 broke below the critical 25,000 level yesterday. This tells us the market is fundamentally reevaluating the growth story for 2026. The key for next week: if the Nasdaq cannot regain 25,000, the selling pressure is likely to continue. Now let's look at a strange phenomenon. Why didn't gold rally during the stock market panic? Mainly because after the historic volatility we saw earlier, gold is currently in a structural repricing phase. Even though the macro environment looks perfect for safe havens, capital is currently favoring the US dollar, leaving gold in the backseat for now. But don't turn bearish just yet. Gold's safe haven status hasn't disappeared. Technically, the 4,600 to 4,700 zone is the ultimate fortress for bulls. As long as this range holds, risk-off demand could pull gold back at any moment. To sum up, next week will be a battle between profit reality and risk-off sentiment. For tech, keep a close eye on whether we can reclaim 25,000. For gold, watch the 4,600 to 4,700 support like a hawk. As long as it doesn't break, the safe haven narrative remains intact. Follow DBG Markets to stay ahead of every market turn. See you next week!